Hi everyone, welcome to Maker Collateral call number 30. Today is April the 14th, 2021, 5 p.m. UTC. And yes, my name is Juan. I'm here with a bunch of people interested in real world finance and real world assets on chain. And today we're joined by SolidBlock. So yeah, it is with us and we'll be explaining a bit more about the project. And yeah, if you guys have any questions, as always, feel free to interrupt. Yeah, they want to tell us who you are and what is SolidBlock.
Yeah, I would love to. If you also enable my screen, that will be helpful immensely. Screen sharing.
That should work.
Okay, it is indeed working right now. Okay, so SolidBlock, our goal is to enable liquidity for illiquid assets like real estate. We are known for our for the first ever commercial real estate tokenization, in fact, which was done by Elevated Returns, and they brought us in to do the technical part. So we're first and foremost the technological platform, but we're also usually partnering with issuers now, with them bringing their real estate experience and us bringing the blockchain and real estate financing experience. So in 2019, we were developing our platform. In 2020, we were picking different projects. And this was the first project that we picked. And I'll tell you why. Specifically, we were looking for a project that's able to compete in terms of returns with just simple crypto, um, just returns that you get on crypto on Coinbase or Binance, by just holding your crypto in a vault, right? So we were looking for an asset that will be high yielding enough, and that will kind of work for both crypto and real estate investors. And the reason why this specific asset, the way we structured it, is able to give 10 to 15%, there's no magic behind it. It's just basically the science of buying assets at a low price, uh, at a distressed state from people or, sellers that really need to sell, selling them at a higher price, and then distributing the profit. And when we do this at a high scale, we're able to give 10 to 15% return. So without further ado, let me tell you about the asset itself, how it's structured, and then I'll explain how we actually tokenize and like what are the legal and the compliance considerations behind it, um, and where we also took precautions to protect investors. So our partner, SolidBlock's partner, is London Chelsea. They have an extensive track record in doing exactly that, working with single family residential asset class. They have a huge network of brokers and foreclosure agencies, just a way to find these gems that you can buy. And usually these assets don't stay on the market for very long. They're bought within a few days, so you kind of have to keep an eye out for them. So they've been doing this for a decade, made a lot of money for investors with this. And so the business model that we're using for this fund is the same business model that they've been using for previous operations, right? So London, Chelsea, they have about 8 people, 8 partners in London working on this. Some are managing properties, some are sourcing properties, some are buying, some are selling. And SolidBlock, we are the tech platform behind the project. So the investment strategy, as I mentioned, is to source great properties, to target properties that are 20-30% below the market value. And of course, we work with appraisers who quickly appraise the property and tell us that, yes, it is below, right? So properties acquired from distressed sellers, cash offers and buy properties quickly, right? So they were not going to a bank and asking them, to finance. It would take too long, right? So that's why, so now the reason why what we're doing here is extremely attractive to this model, right? We need to buy and sell properties quickly. There's slight refurbishment and fix up, and we are targeting to earn about £100,000 per property, right? So we buy let's say at 300, sell it 400, something like that. We're using London zones 2-6, where people are moving out right now because of COVID and other considerations. They're moving out of the center and a little bit on the outskirts, buying bigger houses, maybe adding a room, which is converted to an office. London prices have been increasing, partially because of Brexit. And, people are, London is the top 10 or maybe even higher, but the property market is very, very strong. And now the taxes are also very favorable. So we really like this market. So I will, by the way, I think this presentation is shared in our materials on the platform. So I'm not going to go through everything here, but I encourage you to kind of go through and kind of learn about our investment methodology here. So another great fit and synergy here is, number one, this is a 5-year bond, and that's the reason why we could give such high returns, 10 to 15 returns. It's a 5-year. This London Chelsea has other products that are 1 year, 2 year, and their returns are much lower. Now, take the 5-year bond, combine it with the liquidity that we provide, and you get a perfect product, right? Because you still can offer high returns, but you can offer liquidity as well. In terms of financial overview, the soft cap for this product is £1 million. That's the minimum that we need to raise, and then we'll be distributing tokens to investors. It's a cash flowing fund. We every 3 months, every quarter, we distribute it into investors' wallets or investors' bank accounts, whatever they select. Right. I mentioned our partners and the London Chelsea team. Andrew Thompson is the CEO, is the most experienced in real estate, has done it for over, I think, several decades. He said 20 years on our last call, I believe. Ramon Vega is a very, very interesting partner. He's well versed with institutions and asset manager for many years. Also, he's a professional footballer, right? I think he owned one of the football teams. Chris Lynn is managing all the properties, also extremely experienced in this industry. I put some examples here, but like I said, these assets, I can't really list assets that we're going to buy because they will disappear within the next few days, right? But there's some just basically for anybody to go through this deck and look at the homes that were bought, right? In terms of our team, myself, I am on the finance side, the capital markets experience. I worked, Wall Street at 18 at a broker dealer, moved to M&A, private equity, financial engineering, structured several real estate funds on the financing side, did IPOs for real estate companies. My co-founder Yuval is on the product and IT side. And then we have a very talented technical team. We have very talented real estate team and compliance and law. So I promised to mention about the structure, which isn't in this deck, but it's in our PPM. We wrote a private placement memorandum. Like I said, compliance is our biggest, both compliance and investor protection are our biggest goals at SolidBlock. So with compliance, we created an SPV, special purpose vehicle, in Delaware in the United States, which will buy all the properties, will hold all the properties, will hold the titles to the properties, of course. Now that SPV is issuing a security in the United States under an exemption from prospectus rule, Reg D 506C. That's one way that we're going to offer securities to accredited investors. For retail level investors, we will offer it through Republic. We're actually in the process of launching on the Republic crowdfunding website. And we also have a few institutions interested. Right now, outside of the US, we can offer these securities to accredited investors in majority of other countries without extensive marketing. In the UK right now, we're limiting to mainly direct sales to institutional investors and accredited investors that we're connected with from the beginning. So that's our regulatory strategy. In terms of Maker, of course, things are working a lot differently, but for the comfort of the Maker community, this is a fully compliant, unregistered security. In our smart contract, you can see, in our PPM and both our PPM and the smart contract, you can see the entity that we opened. It's called LCRE, London Chelsea Real Estate, LLC. You can also see the registered QSIP number. A QSIP number is similar to an ISIN. ISIN is when you go public, you list on a stock exchange. A QSIP number is an unregistered security with this QSIP agency, which does do due diligence, does require all of the documents, reviews all of the agreements. So we have to submit our LLC agreements, organizational structure, PPM, all the documents for them to verify that, yes, this is the entity that is going to be issuing this unregistered security. When I say unregistered, it just basically means that we are going under an exemption. We are not going to do a public offering, right? Which is a registered offering. So I think that's what I wanted to share with you guys.
That's great, Yael. Do you have any questions, especially the real world finance people that have a more extensive knowledge than me on this?
For sure. Guys, do you hear music on my background, or we're good?
Very, very low. It's fine.
Good. There's a huge party right outside my car with like 100 children. Okay, go ahead.
Okay, so thanks, Yael. I guess, what is the state of the market right now as UK is coming out of lockdown? And I know talking with Andrew before, there was a window of time in which a lot of great deals would be available.
Right.
Do you see that? So where are we in that window, do you think?
I mean, the window will provide an additional income, right? We structured this product even before COVID hit, right?
Mm-hmm.
So this is the 10 to 15% is expected in any case, right? Any scenario. But I think that right now, this year, we're going to earn much more because right now the prices are extremely low, and after COVID, we're expecting a big shot up in the value of prices as well as things go a little bit back to normal, right? And with London turning going back to being this tourist empire, right? So people will return to buy apartments for Airbnb, and right now all the Airbnbs are for sale. So you can imagine, and this window is going to last for another at least 6 months, in my opinion.
Okay, thanks.
Yeah, how do you see the collaboration with Maker? How do you see the dynamics or the amount of money that would be needed?
So in terms of the amount of money that's needed, I believe that we can use Maker as an underwriter in a way, where we'll, like Phil said, we'll be able to take advantage of this amazing opportunity of buying assets even at lower prices than usual, right? And then as we catch up with our investment strategy, we can repay the financing, the leverage, and then go to the next asset. So that's one way that we can collaborate. And the other way is, in general, since we're getting 10 to 15% return, let's say without Maker, perhaps our raise capability is only 10 or 20 million, and maybe Maker will be able to give us an additional push, and that will enable us to buy even more apartments and faster, right? So we'll be able to make more money for investors at the end of the day. When you get, like as I said, we're not able to go and get leverage for apartment because it doesn't make any sense. By the time we get bank loans will be, the apartments are going to be gone. But this is providing everybody with an opportunity to get a higher level return, right? All our investors. On your side, you're getting a great stable product that is relatively low risk because it is spread across a high number of assets. It's an asset class that usually is not available to institutional investors or to like kind of larger investors because it's so small, right? Each apartment is 200,000 pounds. So, but in this case, it's available because of the way we structured it. And finally, when we're done with raising funds and deploying this one, there's so many other cities in the world that we can work with, and I think it will create kind of a mechanism for us to work with similar developers to Andrew and his team.
Interesting. And if you had to give a more concrete numbers on how much money or the interest, well, I don't want to call it interest rate, right? But do you know at least the ballpark of what would we be looking at?
Of interest that we deliver to our investors or interest that we deliver to your investors?
So, I mean, potentially, you mentioned already that 10 to 15%, so I would expect that you're asking to borrow money at something less than that, hopefully.
Of course. Yeah, hopefully. I mean,
Yeah.
when I started working with you guys, with your team, I had an understanding that there is an actuary or some sort of a process that determines the risk level. So this is something that's up for discussion, right? Like if we were to go to an entity, an institution, and borrow money, we could easily find a lender that will lend at around 8 to 9%. So that's something it's easily available in the market. So we'd definitely be looking for less than that. But it's something that, if I did do such work in the past, I haven't done it for this product, on the lender side. I'm sure you guys have some sort of models, and if not, we can develop them together.
Seb, do you want to maybe comment a bit on the process?
Sure.
Yeah, so the process, it really depends at the end the risk, and obviously the rates depend on the risk.
Yeah,
because
exactly.
one piece I'm not following completely because it's Phil that is working on this topic more closely. Is what is the loan to value in this SPV, because the SPV have all the assets.
Yeah.
And you issue loans against those assets, but what is the LTV?
I think that in general, you're looking at, in real estate, LTV is somewhere between 50 and 70, right? So for riskier assets, you're looking at 50 or less. For this one, if you're buying if you're buying a home as an institution, you're looking at 75% LTV sometimes, right? So, because it's a residential property in a city. However, so it's somewhere in between those two. I don't think we'll need that much money, frankly. However, that said, we haven't raised funding yet, so I don't know what we're gonna base the LTV on a potential value, or the way that we're talking to, we're talking to Centrifuge, and we're talking also to Reno, and their trust. So there's several different ways to do this. And one way is, of course, for us to buy a property and then deposit, that title and get, I don't know, 65, 70% of that, right? So that's one way to do this. Another way, and I don't know if you guys do that or not, but, get a loan before to buy a property and then deposit it, because it is backed by our token. So it really depends on how we structure it. At the end of the day, it's up to you guys to tell us how, but we are open to whatever makes sense.
Yes, that will be something to discuss. You're completely right. And there is a lot of opportunities because we are open to almost anything. If it makes sense, it's okay for us. We are exploring the space. But my question was, so you try to raise $20 million for tokens, which back a note. And what is the value of the notes compared to the value of the real estate in the SPV?
I mean, the way it works in our industry is that if there is trading, it is a bond. So let's think about this. It's a bond. It has the value is going to go up as it approaches its maturity of 5 years. There's a distribution at every quarter, right? So January 1st, April 1st, and so on. And there's also annual additional distribution of additional income if the fund is doing really well or if the market is doing well. That's they're getting 10% base and another 5 if we've done really well. So we expect the value of the supply and demand in base value of the bond to go up when it gets close to the distribution, and annual as well, right? And then of course it will keep going up as we near the 5-year mark. So however, if we didn't have the whole trading component, then you would defer to like a net asset value of the fund. So that's but this price is going to fluctuate.
Okay, yeah, but let's say you are making the first balance sheet of the SPV, Delaware SPV. At the end of the year, you have, let's say, 20 million of for the note.
Yep.
And how much equity do you expect to have on the balance sheet?
How much what?
Of equity.
Of equity. That's a great question. So we do have a provision in the PPM to be able to leverage bigger assets. If there's a bigger asset, we could go and leverage it. I think if we put a limit on the leverage, it's in the PPM, but I don't remember what it is. I think that we put a leverage of 25%, but don't hold me to it. I'm gonna go back to the PPM and I will look. That was a requirement by I think either maybe even by Maker. I have to go and back and look, or by Republic. It was a requirement by some platform to go and put that on. I'll let you guys know.
It's in the PPM.
Yeah,
sure, perfect. Thanks.
Yeah, that was actually created so that we wouldn't be able to over leverage. So. We can put more. We can always issue more. If we see that something needs to be done, like that's a big problem in the industry, and that's why I'm also just in general concerned with the DeFi industry because of this. So if we need to make more limitations and more adjustments, I'll be happy to make them things that make sense.
Okay, great.
Yeah, perfect.
Yeah, and how is it going with Centrifuge?
So we had a few phone calls. It seems like Jason has found a way for us to do this. It's a little bit more complex because they're doing they're more geared towards smaller, working with a property by property and something very specific that they created for that project they're doing with New Silver and in general with invoice, financing. It's a little bit different. I think so. We can work with Centrifuge. That's one way. I also got in touch with Reno, and they're almost done with setting their trust. So we'll do whatever is available first. I think that's what we'll do.
Okay.
But the Centrifuge will require for us to, like the way Jason likes to refer to it, as to take a cow to go to the supermarket to buy milk. So basically do a little bit of jerry rigging. Yeah.
Okay. Yeah. So the trust model is also possible. Okay. All right. Yeah. Well, regardless of those mechanisms, I mean, could you describe a little bit about your token?
Yeah. I mean, our token is an ERC20 modified with a whitelist. The whitelist is managed by SolidBlock with the North Capital API, which are checking KYC and AML globally. And for American investors, we're also checking the accreditation. We are limiting some countries, the obvious offenders. They usually are limited, and I mean like rogue countries like North Korea and stuff like that. But America is obviously included. Accredited investors in the majority of the world are included. What else about our token? It's it expires after 5 years, right? So at 5 years we burn the token, we distribute the profit. It should be noted that we will have an administrator in case of default that will take care of investors. We'll try to fix the whatever needs to be fixed for 6 months, and then it will sell the properties, distribute. And since we don't have a senior lender, then on this project, the investors are actually in a good shape. So they'll be able to get some of their investment back, right? In case that happens.
Okay. And you were also you were getting the token listed on secondary markets, is that right?
Well, of course, yeah, 100%. It's going to be listed on INX first of all. It's going to be listed on T0, and we're looking into what will happen with RChecks when they're going to start operating and list there as well, possibly. We partner with 10 exchanges right now, and we were building our own solution kind of to gauge liquidity on those exchanges, and then also to be able to control inventory in between so that we can list in different places. So that should come out by the end of the year. So we might be able to list it on a few, but at least we'll list it on 2 or 3. And of course, it's going to be tradable on SolidBlock as well in a bulletin board form, right? The OTC.
Okay, thanks.
Any other calls or anything we're forgetting, guys?
I mean, I'm here if anybody's forgetting anything. Pretty available on WhatsApp or
Just out of curiosity, it seems like a lot of the projects SolidBlock has brought to Maker so far are like regional specific. Is there interest in looking at like broader?
a regional specific. What do you mean by that?
Oh, just like this, for instance, being like the London commercial area. Like,
Yeah.
is there any interest in developing like a wider portfolio to utilize with Maker?
So I believe that it's, for now, it's better to go project by project, just because that's how people invest. Like some people do invest in REITs, for example. So we are planning to do indices and ETFs, and that's going to be super interesting for Maker, I think. But we're about a year away from that. We're working on, let's say we'll have 5 different residential properties. Let's say we'll have London, Berlin, New York, San Francisco, whatever, right? We'll combine them into an ETF, and then we can use that, an index fund as a basis and to leverage. So that will come. And we have also, by the way, we have a fund right now that could be super interesting for you guys, which is a medical facilities in Florida. So it buys and invests in medical facilities there for detox, for opium and alcohol. There are a few projects. Like we're kind of invested heavily in this one, in the London digital bond, for several reasons I mentioned. And one more reason is super flexible. So, when you go and you have to buy an asset, you have like very specific requirements. But when we have a portfolio of assets to buy, and it's, and it's a big spread from $1 million to 26, right? We'll be successful anyway. It's not like we have to now raise 20 million, build something. The risk is relatively low. So that's why we love this one, and also another cool reason is in the US, you have all these rules and regulations for crowdfunding. And one of those is that your SPV has to hold 100% of the asset. So this is one of the very few projects where we have that, because otherwise we usually buy a part of the asset and not the whole thing, because it's either leveraged and we only tokenize equity. So we don't own the whole thing. We will tokenize a part like 20, 30, 40%, like the other project we brought to you guys. By the way, our plan is to bring you a new asset every month. So like by the first of every month, we'll give you a new asset. We just kind of took a break this month to see if we can actually do it and pull it off. But if we see that it's possible, we have, you know, a pipeline of a few $1 billion right now. And by the way, the assets that we want to bring next are bigger and more. You know, we have a town in California. We have a commercial triple net lease portfolio in Vegas. So we have very, very interesting things to bring. And but we want to see how it works. And I'm sure you guys want to see how it works too, right? So we kind of have to pass this pilot together and, you know, also make sure that we address all the issues in advance. And that's why I actually really enjoyed this process, initial process of the back and forth of different requirements, because also kind of, you know, you think ahead, you're structuring a perfect structure that we can use going forward.
Yeah, I thought that the token was kind of like a pool of different assets, and then you say that you're bringing a new asset into the protocol. But is it added to the same pool, or is it a different pool? How does that work?
No, so this token is representing an interest in the LLC that buys and sells properties. This LLC, according to our business plan, the LLC is going to take a spread of about profitability of about 60 to 70%. Now, SolidBlock, London, Chelsea, and our investors are all going to take a third of that spread. So, you know, and of course, there's expenses associated with the fund, right? So after the expenses, we will, and by the way, investors are getting preferred, right? So they're always getting 10% if there is income. SolidBlock and London Chelsea have less. And so the investors are getting theirs first. So they're getting 10%, and then they're getting up to 5 more if the fund did really well, right? So you're getting participation rights in the income of the LLC. So, however, your loan, the bond that you bought when you invested in this project, the bond that you bought is collateralized or backed by the properties. What does that mean? That means if for some reason the bond is not paying you back, you know, something is wrong, whether it's because the fund itself is not functioning, then like I said, that there is an administrator that will go and fix the functioning of the fund, or maybe the market is not going well, then again, the properties will get sold and whatever is left is distributed. So that's what it means, that the bond is backed by the actual assets. It's backed by 100% of these assets, right? Because they're mainly not leveraged. And like I said, there is a possibility for some leverage within the BPM, and have to go back and check, but it's limited. And it's also, as a bondholder, you're entitled to quarterly reports. If there is any loan that was taken against these properties, it will show up on the report, right? So there's also another way to trace to control these things.
Sounds good.
Hello.
Hey,
Juan. Yeah, hi, Yael.
Hi.
Thanks for coming and sharing your presentation and your company's outlook, which some of it sounds super exciting. So I kind of missed the beginning, and I got distracted because the Coinbase, IPO just went off.
Oh, really?
Yeah. So yeah, it's
quite a
looking okay.
competition. Looking okay, good.
Yeah. So I might have missed this, and you might have mentioned it, and I apologize, but I know on your MIP6 application, you mentioned that you guys were going to do the Republic listing, I believe. And
Right.
I'm not sure if you already went over it, but how's that going? Is that something you guys are close to putting up to the public? And if you are you going for the 1 million raise or the 5 million new allowance that they're allowing Americans
Yeah.
to do?
So we are very close. We're at the final requirement stage, and we're going for 1 million at this point, and it's going to go up to 5 million. You know, we just kind of took the 1 million first, and then we'll convert it to 5 after the raise.
Right. So you're going to reapply for the extension. So are the Republic participants going to get just the same token that the accredited investors get, or
Yes, the
it is?
same.
Okay. Got it. Okay. And can you expand on Real? I think you're on Real T, right? Is that what it's called? Real IT?
Yeah, no, we're not on Realty.
Oh, sorry, it's T0.
T0, yeah.
Yeah. I don't know if you spoke about that already with the St. Regis Aspen Ski Resort.
Yeah.
Is that something that's still going on? Is T0 still a working product?
No, T0 is ready to go, and they actually brought a bunch of new investors. And that's why there's so much trading on the Aspen coin. Some days there's like 3,000 trades, I think even more. Like in dozens of thousands of trades. Like it can go up very high in terms of trading. So yeah, but the reason why is because they only have maybe 4 products right now. Not that much to trade, but it's going really well. So I think the market is going to be very favorable.
Got it. And so I guess the ASPD token is an ERC20, correct?
Yeah.
Okay. And is that something that, so is that what you're offering to the Republic investors, or is it?
Yeah, it's the same type of token. Actually, we followed the same standard we created with the app.
Okay, got it. Sounds good. And what I don't know if you went over this also, so I apologize again. So what do you what type of return have you guys shown if you have a track record, say going back 5 years? Is it a return of double digits? I mean, can you just go over that? And I apologize again if you did.
No, I didn't go over that, and that's a great question. We have that somewhere in the materials. I don't have it on this deck, but we have a track record. Maybe let me try to find it on my computer. We have a track record for the London Chelsea team, showing, you know, this 60-70% profitability, like going back 7 years.
Is that annually, or is that the 5 years?
I think that's over a period of time. I don't think that they did it annually, but anyway, I'll look for it some other time, and I'll send that to you again.
Okay, yeah. If you could put that on the forum, that'd be great. But all right, cool. Thank you.
It should be there, by the way. I think somebody asked us, and then I think we sent that in. But yeah, it should be there. But in any case, I'll send it to you guys separately. Oh wait, I found it. Give me a second. I'll share my screen again. All right. So this is basically where they bought properties in London, and this is what they purchased, what they sold. I guess they didn't put the dates on it, but all the properties that they bought and that they sold, and then the profitability of that. So that basically is 6.7 million. Around 6-7 million worth of pounds worth of property, and then the profitability.
And these are actively managed, right? Sorry.
Not anymore, right? So they sold them all.
Oh, okay, cool.
Is there any type of I don't know, remodelation or maintenance that's done to the properties?
Yeah, there is a little bit of an investment, but just very cosmetic fixes, not a lot, but kind of to maximize the value. Like you can see that they purchased, or in this area, they purchased at 1.1 million, and they sold like almost double, right? So they made.
Yeah, I was wondering what the gross profit was and if that was included or not.
Yeah,
That
exactly.
could
That
change
was
the
100%
picture.
profit, right? Not
Mhm.
everywhere, right? But in most places, that's what they got. Obviously, I think it was before tax, so you have to pay some taxes. But like they said, the stamp duties or duty is lower. So yeah, so they made 100% profit probably before tax for expenses, right? So then when you subtract that, it goes to a 70-80% if I remember correctly. So that's basically how much they were ready to make, and that was in the last 7 years, which are like normal, you know, regular years of property prices going up. It's just a matter of finding these undervalued properties.
Right. Are there any other questions for Yael, guys?
I got one that's kind of more for Seb.
Mhm.
I was curious if you had like a preferred way in terms of figuring out the onboarding for these. Like, is it kind of whatever's going to work best, or like, do you prefer using centrifuge, or I guess
So
kind of what's our outlook?
Yeah, I prefer using our token rather than our title. And the reason being, I just had a call with our lawyers, and they're saying, "Wait, we have to check if this is even legal in the UK and in London. If we that we can deposit the the title, right, with a different company. So we have to go out and check the legality. I'm sure we'll work it out in different ways. But in general, for the sake of DeFi, and also for your sake, guys, like um, there are going to be many more companies like SolidBlock, and there are, right? There's Reno. I just actually met another company that we're gonna, and everybody, by the way, wants to work with SolidBlock to a certain extent because we are the source of the deals. Like we're really extensively focused on finding real estate partners. But there's another player called Accru. I like them a lot. And then of course there's Reno. There's Realty has their own DeFi, but which I think is have to look into compliance. I like you guys specifically because it seems like you all have thought it through in terms of regulation and compliance and how to do this in line with what's in the real world. So that's really important for us. So what's in the real world right now for tokenization is we are doing this work to create a token, and there's so much behind it, um, so many legal and regulatory processes behind it. Then just taking a title and putting it somewhere um, might be a little bit complicating things. Now that said, like I want to work with Centrifuge in any case with one of the projects, just to to see how that's going to work, because it definitely is easier for us. Here's a title, and go do the work that we do. Um, so let's say this was a very long-winded answer, and I'm sorry for that. I'm gonna try to work it out with Centrifuge and parallel with a trust and see which one. I need some more investigation. Which one is going to be faster? But I think the most appropriate solution for us is the trust.
Yeah, I would say that as well, because you already have a token, you already find out the legal details on the securities aspect. So why do it again? Another wrapper of legal stuff on top of that. So it doesn't make much sense. At least I think so. So
and
it makes much sense.
100%, Sebastian. And I told Jason, we can structure the next one in this way, that we can do it through you guys. Like we have a lot of developers that can come and deposit titles and do things that way. So we're open. There is a way to do it with Centrifuge. We figured it out with Jason. If we have to do it that way, we'll do it that way. If we can do it relatively fast with a trust, we'll do it that way. So we're open.
Cool.
Any other last questions before we reach the top of the hour, guys? All right. Yeah, where can people find you and contact you if needed? What's the best way?
Sorry, I just found hold on, I'm gonna give you in the PPM, which you have access to on page, I'm actually not looking at the last version, but I'm gonna show you on the screen what you should be looking out for in terms of the leverage. As a part of a strategy, we may borrow funds against certain properties, which loans will be secured by the relevant property. If we default on such loans, investors will have no remedy, blah, blah, blah. That's disclaimers. So we're saying, sorry, maybe that's not what I was looking for. If I saw the 51%, I got excited, but that's something else. This is, never mind. I'll find you that, sorry about that. I'll find you that clause about the limits on the leverage, and I'll send you. Sorry, you were saying?
Oh, sounds good. So I was going to ask you, where can people find you, and what's the best way to contact you if needed?
They can find me absolutely anywhere. You can come to my house and hang out if you want. But
That's nice.
I mean, the best option is probably to email me, yael@solidblock.co, and they can also WhatsApp me, and my number is somewhere. I can put it here in the chat. But you're intending to post this recording, right? Post it here. So yeah, so that's my number, and you can WhatsApp me. I go occasionally on Telegram at Yael Tamar. Twitter, Yael Tamar, LinkedIn, Postal Gov, whatever you get.
That's great. Anything else you would like to say before we close the call?
I want to say thank you. Everybody is coming here. I don't think you see my screen because I stopped sharing my screen. I'm just on my phone number. No, I just wanted to say this is my phone number over here. I just want to say thank you for evaluating us, and we appreciate this big team coming on the call, giving suggestions, asking great questions. So you're all a pleasure to work with.
Sounds good. So thank you very much for coming. It was really nice having you, and thanks
All right.
everyone for the nice discussion.
Bye.
Thanks, yeah.
Bye.
Thank you.